Hello traders, Gary Wagner here. Approximately 10:30 in Honolulu, 4:30 in New York. It is Wednesday, the 3rd day of October 2012, and this is the daily report for gold and silver. Mixed bag in the precious metals markets, with silver and palladium trading lower today and gold and platinum trading higher. This all in the face of some bearish outside influences such as a firmer US dollar and crude oil prices that have been moving lower on the day. Currently, as you can see, our print is 1777.51, 1778.51 is the ask. Puts it up about $3 to $3.50 on the day. As you can see, silver's current print, 34.59. It has had a low today of 34.41 and a high of 34.99, just shy of $35. Gold's low today, 1770.80 and 1782 on the high side. Traders, I want to start today's show off by looking at a short-term 360-minute straight candlestick chart. Of course, this is of the cash market of gold. As you can see, about 1778, 79 bid-ask spread. And what I am drawn to in terms of observation is really this tight range that we have traded within really since the beginning of the month. This is, of course, October 1st right in here. Of course, we're only on the 3rd. But you can see that we have had you can obviously see the alternating candle colors. In terms of the highs, we are not able to take out these two series of highs that really made it above 1788, 1791, I believe, and 93 were the prospective highs. Ever since we have seen this market really come up from what just above 1735, of course, this is known as a piercing line, this two-day pattern right in here. You received confirmation, although it wasn't really strong, and the market went from that 35, and that's the time that it really moved lower and then shot up $32. Since then, it's really been pretty stagnant. And really, when we're looking at this, we realize that you've got some very important fundamental data coming out. Of course, meetings from the current FOMC meeting, that's scheduled to be released tomorrow. Friday's unemployment. And one cannot forget the fact that coming up this evening will be the presidential debate, although I think that the FOMC meeting, as well as the unemployment or employment report, jobs report, I should say, are really what traders are waiting to see and digest. Of course, when we step back, and that's what we're doing here by looking at a weekly chart, straight candlestick format, there can be no doubt that after this beautiful little rally, which we participated in quite successfully, I should say, ever since it really hit this, what I'm calling now a triple top, and the triple top is just at around the $1,800 mark, $1,800 per ounce, you can see that it has been really unable to take that out. We've talked about this for the last couple of days, that this, in fact, has become pretty definitive resistance in the area. Now, when we look at our weekly chart, and this, to me, is what's important, we're still in green. The market is still above where it opened on Monday. And the body size is beginning to grow because, honestly, when I see this many dojis, meaning a week in which the open and close are roughly the same or very close to being the same, it can be consolidation, but it can also be a reversal. The fact that it can be a reversal, coupled with the fact that there's strong resistance right at these highs, concerns me on a technical basis because as a market consolidates, it's going to really need to build up some steam or momentum to break through this. Up till now, we have not had that steam, and the market's really stalled in this particular area just below 1,800 per ounce. Depending on the reports that come out, we are going to have this market, I think, move strongly one way or the other. And if, in fact, that move is down, I want to be prepared to raise the stops and get out with a minimum hit in the marketplace itself. However, we haven't received compelling data or information on either side of the fence. The one thing that we can say is it's absolutely found resistance. The other thing that we can say without a doubt is that the market's consolidating, and we'll have to see which weighs more heavily upon the marketplace itself. Now, traders, as you can see, I've converted that same chart from a candlestick chart to a Henkin chart. The reason being is I want to be able to kind of take a look back and, more importantly, take most of the noise out of the market. And you can see, rather than seeing those triple dojis that we saw on a straight candlestick chart, we are seeing one straight green, and that is good for the bullish side of the marketplace, no doubt. We've got straight green all the way up. Now, last week we actually had a tail, and this week there's the absence of a tail in terms of body size. The body size is compressing, it is getting smaller, and that can be indicative, as you can see in here or in here, of a possible reversal. At the same time, that's not always the case. As you can see here, you had large body size really up until the point in which it went red. There was really no prior warning to this correction. Small body size here, so you got a little bit of a warning, and you got a little bit of a warning here. But as of yet, we're not really getting those warnings. What we are getting is a continuation in terms of a straight level of resistance in this particular area just below $1,800 per ounce. And traders, just as $1,800 per ounce in gold is a strong resistance area, the same can be said for silver at $35 per ounce. No doubt, we'll simply take a look, and what we'll see is that except for a couple of occasions when it traded into and above 3,500 on the Henkin chart, and we'll convert this in a second, but on the Henkin chart, we have not had the ability to see any kind of close above $35 per ounce. And when we remove the study, the Henkin study, you get a slightly different picture, because what you're getting now is a market that's truly consolidating. You can still see these highs where they attempt to take out that price point, but to no avail. The bottom line is the market is consolidating. We have hit some resistance, but realize, traders, we are long this market at 29.10, which is roughly in this area right here, just above that. So we've been able to really ride this market extremely well. We're still positioned. Our stops are trailed up. We'll let the market do what it wants to do, and we will profit accordingly. Our stops are high enough that no matter where they're hit, they're going to knock us out with an extremely well-defined profit. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.